So the point is like this is a very risky bet to make, you know? You buying yourself 18 days. The expected move is $19 roughly. 16 and a half premiums are cheap, right? Implied volatility only 16 and a half. And but you just looking for the price to move as quick as it can, you know? So the point is like this is what most people do every single day. They're either gonna buy calls like this or they're just gonna buy puts. And they just hold and they just there's so many like okay, if you wanted to see if you want to do um um can do a dollar point, we can do a percentage move. Let's say you want to factor a 5% upside, 5% downside. So you can I don't think a 5% drop is going to happen in 19 days. That's a huge let's say you can do a 2%. So your 2% move is 658. So from here to here, your reward is almost 2700 bucks. A 2% move in 18 days. That's on a very kind of high side as well, to be honest. I mean, I would, if you can even get lucky with 1% move for all the time that you're fighting, it's 1,000 bucks, loss of 1,000. Tells you right there, $1,000, $64, 64, $1,064. 1% move and then 1% to the downside is almost $1,000. And you risk in $2,000. Every option trader who's been trading, who understand Greeks, who has a lot of experience in trading options, will recommend you to trade spreads. Spreads has a defined risk. I mean, here you have pretty much the most you can lose is what you pay for it. Obviously, everybody knows that. But spreads is just helps that you can structure a trade in many different ways. You know, cost is less, um, lot less, negative theta. So if you have now, if we do 650 here, now we do, let's say 650 and what's the expected? 645 plus 19 is 664. So let's say you do 650 and 660. So we don't have 664. So let's say 650. So if we do a debit spread, that's a 10-point wide spread. It costs you $3.54. So that's your debit spread now. So you 24. I got to bump it up a little bit down to 100 deltas. The theta cuts down to half. Is it 40 better than 80? It's $2,000 risk here. On a 650 call, you pay roughly $5 for 4 contracts. 162 deltas gives you 86 negative theta. Here you make a spread of 650 and sell a call against it at 660, 354 back to 4 contracts, which you're paying on that one. Here you're risking 1,416 bucks. Gives you, if you want to go back up a little bit more, you can do 121. Now gives you $1,770 worth of a risk by paying $3.54 in premium. Now your upside is capped at 3,230, which nobody's holding it for that long anyways. But the point is from here is at least you have a little bit of a breathing room when it comes to time. So 1% move is $728 up till here. A 1% move to the downside is 798 plus 1 and plus and minus 1. It's a percentage move from the current price that tells you exactly what you will get paid. Now, if you want to go up to a 6 contract, 7 contracts, 8 contract, catch a 1% move, gives you 1,100 bucks. You down 1% on a trade, that's how much money you're going to lose. So you can analyze the trade to see exactly how you want to structure the trade. What is your risk that you're willing to take versus what your reward will be based on the percentage move? Okay, that's what it is. They're like, okay, well, I want to structure the trade. I want to see like if I can get a 1% move to the upside on a stock. What would be my payout would look like? Well, if I would risk this much, this is what I will make. So it's just like in focus more on I mean, do what is right for you. I'm not going to tell you what to do, but I mean, I prefer spreads. I try to do those are the only bets that I'm willing to make. But if a spread is 650, 660, and you don't want to trade spreads, you want to pay more, just buy the 650 call, the one we just did here. Now you have a bullish bet. You want to make a bearish bet, you can buy a 640 call. Now you're making a bearish bet to the downside. So you can just do a single. It's just a matter of like, do you want to sell something against it? Is to make a debit spread. That's what the spread is, plus 8, whatever the number of contract, plus 3 minus 3. So that's option is, and some of you guys don't even trade options. I know some of you are who you are. Some of you don't even like options. You just want to trade shares, which is the best way to do it, to be honest. Some of you are in futures and stuff, which is you don't have to do any gamma, theta, whatever. Future trades are really, one guy was asking about futures. Let's say you want to do the minis. Futures are very easy to trade. So you put a ticker here, slash my, or I don't know what broker that you're using. So slash MES, right, is for the micro E-mini. I mean, the standard ones is going to be the ES. So this one. So when you put a ticker here, it pops up this window right here. It shows that this one, these are the active ones, right? This one has 18 days left. Expiration is going to be September 25. So this is the change last price, and you have a bid and ask. So if you want to you just buy it just like as a shares. So let's say now you are bullish, you can just hit buy right here. By default is as one. So one contract here, a future, which just has 18 days left, trading it at 64.78 price, and you just send and confirm. That's it. It's just like buying shares. But these are leverage. So now if you just want to analyze this thing, right click this. So now 1 point S&P, the future is going to move, is going to be $50. Okay. There's no gamma, there's no theta, and there's no vega. It's all zero and always will stay zero. All you're doing right now is just like trading a straight delta per $1. You want to do $2, it's going to be $100. 1 point S&P, so the futures is going to move. Actually, right now it's trading is moving because futures, the market is trading right now. So right now, let's say it's trading at what 64.78. Let's say we do this. So now the trade is open. That's it. So we analyze the trade. Now trade is open. So now we're long. We're making a bullish bet of 50. So let's see. This is just the analyze. Now is down. You see, is moving. So if it's gonna come down one point, you lose $50. So this one contract of an ES is gonna take out $30,500 out of your account. Okay, that's right there, $30,500 to trade one single contract of an ES. That's the money that they're gonna hold. So right now is so now if the price moves from here, make a move, whatever the chart shows. Let's say if it goes, what is that? 64.78. It's a simple math. Let's say it goes up to 64.95. You made $800. So that's your upside. There's no gamma, theta, vega. Unless you bet to the upside and to the downside. Now downside right there, you see, goes steep unless you gotta use the damn stops. You can't leave it like this open. You can destroy your account pretty fast. The market rolls over. So that's just the standard one. And if you want to do the mini ones are just, you can just the same way, you're going to put a ticker in there at 18 days, ask, as your mid, whatever you want to pay right there, and hit send and confirm. So now one contract is costing you, is giving you 5 deltas. If you want to do two, it'll give you 10. So 1 point, the future moves, pays you $10. So now if price moves from here to here, I mean like from current price up goes up to 64.78, make $1,000. Same thing to the downside. Comes down to 64.78 or so, you lose $1,100. So you can just close it anywhere you want and you can set up a stop loss. So that's futures is. So you take a directional bet, but you don't have to deal with implied volatility and you don't have to deal with theta. Just a directional bet. Hedging part on a stocks depends. What do you, let's say, let me see if I can show you an example of a certain stock. Let's see. It's a change in there. Hang on, I'm just looking at the mother screen. Let's do an example on ABWI. Okay. Okay, so here's a chart of ABWI. I'm just going to give you an example. Okay, let's say you bought a stock way down, right? So meaning that let's say you were holding shares. We're just going to analyze the whole thing. Let's say you have 100 shares. You paid $150. Okay. You can just apply that thing to, I got so much stuff open. You could apply this thing to any stock. Let's say you had 100 shares. You bought them at 150. Okay. So from the 150 price that you paid, right now, I'd be trading at 210.50. So you're up like $6 grand. Okay. So your starting point was like way down there. So you hold in a old position that you had it for like several months, close to a year and a half, depends. So now what happens is now let's say like, okay, well, I'm in a trade is moving. I held it that I've been long this stock and stock is going my way, which is fine. But now you don't want to sell it, meaning that's like, well, I'm not going to be able to get that $150 entry back, right? Which is a pretty good entry if the stock has already moved so much to the upside. You say like, well, I don't want to sell it. Well, the money is not yours until you sell, right? Which we all know that. But then we come back here to a chart, we see a sell signal here. So when we see a sell signal here, it says like, okay, well, should I sell it? Should I hold those shares? What should I do? How do I hedge this thing? So as you know, like every buy signal and a sell signal is going to have the same stop loss. So if you want to, if how do you hedge is you had a sell signal, is one has a stop loss right there. I mean, we can pick a different example as well. We have a stop loss right here at 211. I mean, right now, I think most likely is going to get stopped out anyways because almost there. Very, because you have to look at this way that the price, which has so much upside, it the sell signal that triggers up on the top doesn't mean that you rally this much and you're just going to be like this. It can happen, but that will happen only on earnings that you will get a full flush down, you know? But on a regular sessions, if company has already reported earnings and the stock has already made quite a bit of a big move to the upside and it gets a sell signal after after I don't know how many days you have to count these numbers of bars from here to here, that how many sessions they're back and forth from there that finally made his way up. And then you get the surprise of like, oh, what should I do? You know? Whatever the case is, I'm just gonna give you that example. In this case right there, you know what the stop loss is. So you have those shares. So you already long 100 contracts, right? Now you say like, well, I want to protect my downside in case if this sell signal right there and the price trying to roll over, trying to make lower lows, how much the price is gonna drop. Well, first of all, I don't know. Second thing is this is like, okay, in case for me losing the profit that I'm sitting at, which is $6,000, so obviously the money is going to be it's going to be start shrinking. How do I protect that? The best case, I mean, you can do a covered call, right? But covered call is going to give you the credit that you will receive up front, and that's it. Now, if you get a little bit of a more steep drawdown here, and you're obviously going to lose more money on those shares that you're holding, right? But you're just only going to receive the credit that you sold the covered call. So the other ways you can do is you can make a credit spread, call credit spread, meaning let's say you have 100 here and you got a sell signal. So you can do in 18 days. Shorter the time is always going to be better, right? Because you can always roll another one. Because let's say you're going to do 18, right? Sell signal is in here. So we know that where the chart went. We know that the price is 211, right? So what we can do is we can do 212 and we can just buy something back. So what we can do here is we can do this one has 43.32, which is good. So we can do 215. So you sell one, not a buy, you're gonna sell a call. And then from here, the implied move is 8. Current price is 210. So 210 plus or minus is 823 implied volatility, 8-point move. That's going to be 218. So we do 215 and we can do one. This one is 73, the 15. So you sold one and then you buy another one here. So you buy this one. And this is what you call a call credit spread. In this case right there, you have $20 that you will receive. Covered call on 100, you can only do one, right? You cannot do two. One equal to that 100. This case right there, you can do more. So you can just analyze this. Now your thing is going to tilt. So yes, you're up 6,000, holding 100. So what you can do here now is one contract is going to pay you 120 bucks, right? Well, obviously, you're going to bump it up. So in this case right there, you can do 10 contracts. Okay. So in a 10 contracts here, what you're doing, you're going to go down now negative 78 deltas, right? You have 100, but the credit that you're willing to receive now for those 100, you can lower it down to 107. Now you have 100 long delta from your shares, and you have 100 deltas that you sell on a call credit spread. Now you're only down 7 deltas. So if the price is going to move down, you're not going to lose much. And if the price moves up, you're not going to gain much either. So you can make these adjustments how you want to structure and how you want to protect the profit they are already made. Okay, I hope you understand my point, what I'm trying to tell you. What you're looking for right now, your trade is that you purchase 100 shares at 150 price months ago or a year ago. That worth is $6,550. How do I protect my $6,000 worth of gains? First option is I can simply close the trade and just cash it out. I'm free out of the trade. If I don't want to sell it, I think there is a potential. I like the company. Fundamental looks good. Earnings were good. They have raised their guidance, this and this. So I can see the market that a company has future growth. So I'm willing to hold. It might go up to 220, it might go up to 250. Okay, but I'm willing to hold it. I don't want to give up my gains. How do I protect those gains now in case I got hit with this sell signal, which can invalidate as well, just as any buy signal, right? Is to see that if the price rolls over, okay, how much of a drawdown that I would expect from from the share that I've been holding. You do the call credit spread. It's the best strategy you can hedge against the shares that you've been holding. So you have these levels here anyways. So those are going to be the levels that you're going to be targeting to the downside if the price rolls over, as long as the price does not make a higher high. If the price does make a higher high, goes above 211, sell signal will be gone. Same thing here with the buy, right? You see the buy signal triggered here. Price has to move higher highs and higher lows. We don't need to come down and take out this low. Otherwise, signal is no longer valid. How far does it go and how long it will stay? We don't know that. This is what I'm working on, the sentiment indicator, which we will talk about this thing later. Sentiment, I've been researching it for a very long time. And it's just, I have the buy sell signals, which is all good, right? But I just wanted to see like the sentiment is gonna help a lot. Okay. And um It's just considered as like a overall mood of the market is when the traders are more leaning bullish or bearish. Okay. So it's very important. It's not a price signal by itself, but a confirmation tool that tells you whether the crowd is supporting the move or not. Right? So there's bullish sentiment, there's bearish sentiment, and there's neutral sentiment. There's three of them. And neutral is when market is just indecisive, kind of more choppy. So it doesn't mean that, I mean, the it just it's not as like what I'm trying to do is just like it has a scale of the zero, the white line right there, and this little blue line that the blue line right there, it has the multiple conditions of an RSI and the like volume and all that kind of stuff. Volume is the most important thing. So it exceeded the X amount of volume, it just where the demand goes, demand rises, and that's when the more buyers are stepping in, and. So it's just a bit of a, I'm still working on them, so don't get too super excited yet, but weekly has amazing, amazing results, to be honest. So they don't actually us like let's say like AbbVie, right? AbbVie had a buy signal triggered back on 7-1. So the price kind of made a low here. Price moved up, backed off as always. Always gonna come back and try to run these stops back to near the lows, and then they will rip right back up. It happens a lot, with the prices. So, and then from here, Abby has been pretty steady. This is where, based on the sentiment, is 731. Okay, my signal triggered here on 7-1. For all this back and forth chop, the sentiment right there actually had a buy signal triggered here on 731 on this bar. It's a massive, huge outside bar. Okay, I'm pretty sure it has a huge volume as well. Since then, as you can see, the sentiment number right now is at 37 on a scale, the ratio, and then it's been up ever since. So the sentiment right there will go negative once the line will crosses below the zero. Okay. So the stock is, so this one, what it is like the point is like as long as the signal is valid, okay, and if the sentiment close to the buy signal after a few days triggers, those are the trades that you wanted to hold, you know. It will have couple whipsaws, which is fine. But what we're trying to do is just trying to put another blanket over the signal. Okay. So it's a totally different thing. I mean, I'm pretty confident, what I have. And, but I'm just like, always have to, in me just to, what else we can add, how to improve this thing more. There's always something, so it's not like you did one thing and like, okay, this is the end. I can say that thing with Elliot, to be honest. There's nothing for me in Elliot that I can learn. I've done enough. I, there's no wave pattern or a correction or anything that I have not traded or I don't know how to label it. I've done them all. I mean, I'm just like I have it as a as a backup for a on a higher time frame, but for like swing trading, that's most of the trades that I do anyways. is just to it's always have like where I can improve, what else I can add, to see like, okay, if the price is making lower highs and lower lows, where does it reach to a certain point where the swing might turn a direction is where I can buy, where I can set up a stop loss. And then from there, if the price turns back up, then, we have our fib targets up on a chart. We have our moving averages. We know what the 50 is. We know what the 200 is. We know if the price does manage to rally, where the wall of resistance is going to be. So we have that plan. If we go up, how far we're going up, where the RSI is currently on a scale. We have a reading up here. What is the actual ATR move? There's so many things that comes together in one single trade, right? So the point is not like, as I said before, like, okay, open up a spy chart, I want to buy 650 call. That's like pure gambling. You have no plan. You have no idea what you're doing. You just want to buy stuff. You have no, like, you don't even know what you're paying for them for as a premium. Either I'm paying, well, I want to pay 1,500 bucks for a couple contracts. What is it actually costing you just to hold that 1,500 bucks? You don't even know because you never even study it. You just, oh, because your focus is so about either going up or either coming down. That's it. That's all you care about. But how to actually structure a trade, that's a whole different game plan. And if you are in the trade, how do you manage it? So back to the hedging part. So in this case right there, what you do is you sell a call credit spread. So you received $1.20 per contract. Okay. So this, that if the price drops 5 points, right? I'm gonna lose 500 bucks, correct? On average. So if the price right now is at 210.50 and if it goes down to 205, my balance is gonna decrease down to 5,500 bucks. Because you lose 100 bucks. You make 100 to the upside and you lose 100 per point to the downside. So in this case right there, if you come down 5 points, you up $490 on the credit spread. So what did you actually lose? Nothing. You're losing money on the shares, but you're gaining money back on the credit spread that you're holding. This is the hedging. That's how you hedge. You protect your overall portfolio and your old positions. Because once you dump them, you're out. You might not gonna see $1.50 for the next several years. Then what are you gonna do? And how many people regret selling? Oh, I had such a nice position on this stock. I wish I would have held it. Right? How many of them are always talk about that? I do. I mean, I make mistakes. I'm not saying I'm the perfect guy. I'm a human, just like you. I make mistakes as well. Sometimes I rush as well and say like, okay, fine. Just gonna take my money. I'm gonna walk away. And then a couple weeks later, after a month or so, you were like, damn, like that price went up that far. I wish I'd have just held it. It happens to every single one of us, which is normal, which is okay. It's not in our in that we know where the price is gonna go. I'm looking at things like, okay, what is the expected move? Okay. If I'm willing to make a bet, like if I'm willing to capture a one standard deviation move, what is the actual ATR, the average true range, you know? So like, okay, if I would get that, I mean, that's a nice trade. So should I just close them? Because if the week expected move has already done by Tuesday, let's suppose. Okay. Most likely the next 3 days the market is gonna the price is gonna chop around. If we get lucky for some sort of a news or whatever, I'm just talking about an actual stock that moves on a week to week basis. With no news. There's a many stocks each week trades. There's hardly any news, but they will move up based on the market strength. If the market rallies, the market goes up, and most of the stock will go up in value as well. So the price just reaches the exact ATR range, and then then it is done. So it just the next 2 3 days, market just chops around and close out the week. So your option market tells you all this here, all these expected moves. That's what the option market is. When you buying shares, well, you don't know. You buying shares for your long term, right? You can say like, okay, well, I want to go long term. I'm going to hold the share for the next 500 days. For the next 500 days, expected moves $54. But when you buying shares, people who doesn't have the knowledge of options, they say like, okay, I'm just going to buy it. I'm just going to hold it forever. But people who understand option market is pricing in that expected plus or minus move for you until the expiration date, which is $54 by 15 January of 2027. So you take 210 plus 50, 54. So if you buying something long dated, you should be focused on these plus minus numbers. This number little right there, the MM, right? That's the market makers. Right now it's flat. It's gonna open up on Monday because the week was ended. The chain hasn't updated yet. So this is the market makers giving you the expected plus and minus move. So back to this is so you lost 500 by coming down 5 points, okay, on the chart. It can happen. It's not invalidated yet. So anything can happen. Next candle can be down and then it can roll over. So in this case right there, you use the same exact stop loss, just like a regular trade. But what you're trying to do is you're trying to protect your downside. Okay, so your call credit spread is going to be your best hedge strategy on your old positions that you don't have to sell and dump those because you're not going to be able to get the print anytime soon unless you expect like, yeah, the price is going to come down from 209 back to 150 pretty quick, then I can just take my money and run. So in this case right there, you use the same way. So you sold a call credit spread of 215 and 220, okay, by going out 18 days by doing 6 contracts. Okay. So if the call credit spread, if you max it out, you're receiving a credit of $1.20. If you max out, you make $720. Those $720 that you will make on a call credit spread, that basically is a $700, 7 point move to the downside on the shares for you. So meaning that, so you're gonna come down 203. Now you lost $700. So you're losing money on this, but that's the hedge that is protecting your downside move. See, now you're back to the way you were. You hardly lost anything because this one came down 700 and you lost money on this one. So you can play around here a little bit. You see, you go back up here, because delta is going to disappear because it's calculating both trade at the same time. Because if you don't have the curve spread, you only back to 100. If you're going to have, because you bring in 53 deltas here. Let me reset this thing. So you bring in 107 deltas against the 100 that you have. So your downside here is, 720. So you're gaining 720 in a credit spread if the price stays down below the sell mark. Now, okay, so what would be if the price goes against you? So you're already long 100, right? And we have a stop loss on a chart at 211.30. So if this same credit spread goes up to 211.20, you lost 26 bucks. I mean, I'm just giving an example because where the stock is right now. If let's say if the price goes up to, let's say our stop loss would be at 300, 350. So the credit spread that you're making, okay, the call credit spread, it will have the stop loss. So like, okay, if the price would go up again, invalidates the sell signal, what what is the money that I'm willing to lose on a trade? 300, 350 bucks. But at the same time, the stock that you're holding, 100, it went up 3 points as well. So you lost what? $300. You didn't gain that 300 because you had the hedge on. You would have made $300 if you wouldn't had the call carry spread against it. Correct? So that's how you protect your downside by doing this. And then you had the upside. That's all based on signals. You gotta have to have a plan. I don't think there's anything has ever traded before. But we don't know that. I mean, how much Nvidia is, who's taken who, like, hang on. Let's say, let's do, we could do Nvidia. No, Nvidia, the sell signal. You see, got a pin bar here on the Monday, on Friday. Look how it is. This is always going to try to run these stops. Like, yeah, sentiment right there is turning bearish on Nvidia. Something to watch. This one matches actually this. It's pretty close on this bar. 819. The sell signal triggered on Nvidia on 813. Okay. 813. So that means, so 813, this, the high of the bar is 183.97. You see these couple pennies, it just had a pin bar here after the price has stayed down, then managed to back up until the earning. That's when the earning came right there, obviously. You see right there, they got the pin bar right there, and now we got the one lower bar down here. So in this case right here, now let's say you have same concept. Okay. So as long as the sell signal stays in place, you keep rolling credit spreads down and down and down. So the reason why I'm showing you all this, because I manage a massive size portfolio for five guys, as you guys all know that. So I do all this all the time because I have several stocks that I've bought years ago. They're they're up quite a bit. And and then some of those stocks they do get hit with a sell signal. That's what I do right away. I want to protect those gains. I was like, okay, fine. I'm not willing to give back whatever the price is going to come back down. At least a call credit spread is going to help a lot, you know? So I do a lot of those just to protect those. That's only if I have shares. I'm not talking about the individual option trades. Those are totally different game. What we swing trades and stuff. I'm just talking about older positions. So Nvidia, same example. Let's say you own Nvidia when it was, I don't know, when it was 100, give or take, you have 100 shares. Analyze that trade. Stock is up 7,000 so far as of last price, $7,369. Same thing. You got hit with a sell signal, as we can see here. So the sell signal triggered here at 183, right? So 183 triggered here gives you a stop loss. You take your upside and make a call credit spread. Take 185, take 190 strike to see how you need to find juicy premiums. Okay, because when you collecting call credit when you selling a call credit spread, you need to sit and see shorter the time is, more and more the juicy the premiums are, because you're going to be positive theta. You want this thing to decay as quick as it can, right? You can go out furthermore in time. I wouldn't do it. You selling something, you wanna make sure that thing melts as quick as it can. Closer and closer it's gonna start getting to the expiration. More and more time that you're collecting every single day. So 2 weeks is always the ideal. Always hunt for those. So in this case right there, we know like, okay, this one has a sell signal. You had a position down that you own for $100, haven't sold it. Love Nvidia, wants to hold it forever, but I'm gonna have a surprise. The price does manage to roll over at some point. It's gonna stay down. How long it's gonna stay down, we don't know that. But we got hit with a sell signal. We got a stop loss where we can sell a call carry spread. Okay, so you have 183. We're gonna use the same stop loss as well. These are the tricky ones because it happens on those earnings and stuff. So you just buy something up on the top. They have 180 there. So we have 183 sell signal. So we can do 185, sell one. Expected move is 12. Current price is 174. So you take 174 plus 12 is 186. Okay. So, but you're near close to the 185. That's what I was trying to do. You can do a 182 and a half, give or take, 185, 185, and then 174 plus 12, 186. 185, you can just buy something. This one has 79 premium. You can do 195, 185, 195. That gives you $1.26. Can bump it up a little bit, see $1.39, $1.48. So $5. See 126 and 148. Yeah, I don't mind doing this. All you're doing is just buying one. All you got to do is just sell to. Want to get rid of this. $1.48. Analyze this. Go back up. One standard deviation move is 168, 178. Now I'm gonna bump this up a little bit more to 6 contracts if I sell, okay, to receive a credit against that 100 that I have. Okay, that will put me at a flat delta, meaning if the Nvidia goes down, I'm not making any money. Nvidia goes up, I'm not making much money either because my credit spread it's gonna keep me pretty much flat on both sides. If it stays down, I can collect the credit that I'm receiving of $888 upfront, I know that I'm gonna lose 888 on my shares. And then if the price does manage to go back up, well, I made 88 and now I'm gaining, trying to recover if the price appreciates and goes up on a value. And then I'm gonna eventually gonna make my $800 back. So your overall the profit that you were sitting on hasn't moved much, right? Because all what you're trying to do, you're trying to protect your old position. It's the best way to do it. Okay, always the minute you're gonna receive a credit, you're gonna be positive theta per day. Every single day, you're gonna make $50. So each day, the passage of time, your P&L goes up each single day. But in this case, same thing. Price must stay below the 183 mark, which is the all-time high, 183.40. So if the price reverse, you simply the call credit spread that you sold, simply close the trade. Because this money, your share is going to appreciate as well, right? So you're going to lose money. But if the trade goes against you, not on a share, because shares you're only in one direction, going up, right? But you're protecting the downside by doing this hedge. But by doing this, you're gonna have to have some, because these are margins. Keep that thing in mind. This is not every time you're gonna sell a credit spread is always gonna be a margin. So you gotta have to have enough cushion in your account in order to make these trades as well. 6 contracts here is gonna cost you $9,000 worth of a margin. So if I would, that's not a problem, but I'm just 10 is gonna cost you 15 grand. So you have to understand this, that you're gonna tie it up your $15,000 for 18 days because you wanted to protect your long position. This one is right there will be capped at $1,480. It doesn't mean that you're risking $15,000. So don't think that way that you're gonna be risking this all 15 grand. Absolutely not. You're gonna be, well, in this case right there, you're long now 177. So you're obviously gonna be making money coming down $77 per point because you're long 100. Now you got a call credit spread that gives you 177 deltas. You take the 700 from your shares, left you with 77. So any price that comes down from here, so you're up 73.63. So you're making $77. See, your P&L actually going up, not coming down. So same thing here on the upside. If the trade does manage to go against you, meaning that the price goes up, in this case right there, because I'm just going to take the current price, let's say price is at what, 173.69. Nvidia all-time high. Nvidia all-time high is what, 184.80. 184.80. It'll be down almost $2,848. So it all depends how aggressive, how you want to size up these trades. Best way to do it is to bring it close to what, how many number of shares do you have? You're not making much, but you're not losing much. If you're gonna bump it up another one or two contract, which I would do, at least if you're coming down, at least you're making some money. You're not just completely sitting on a flat line, you know, just to put another extra one or two contract. That's all. You have your long position that you have no attention to sell it anytime soon. Okay, so that's fine. Leave that position the way it is. No, nothing. I mean, a price will fluctuate. It will move around here, there. I mean, it's normal. How many times I have a position that goes up like 600 points, the next day is freaking negative? It happens. Then I mean, I'm not gonna sit and pound a table thinking like, oh man, I should have, I would have taken that 500 yesterday. I had them, but I didn't. But I'm just like, okay, signal is fine. I mean, we gotta, what I mean, I understand that we're trying to fight the bottom. They're just gonna make everyone excited over a one single day, and then they're gonna try to run stops just to try to bring everything back down here, and then they're gonna rip it right back up. So it happens a lot, because price has spent so much time below the 50 and 200-day moving average. You go by days and days and it turns into a weeks. Weeks can turn into a one full month to a month and a half. That's a lot of time, a month and a half. For a good company, a stock to be stayed under 200-day moving average. So when the price does manage, try to see like, okay, if the sentiment's trying to improve, if the buy signal triggers, right? So there's some positive sign. If the rotation is coming into a place, the RRG is the one that's going to give us the momentum and the alpha that we're looking for. So if we have those things all aligned together, and if we're just the trade does manage to form a bottom and trying to move up, I mean, yeah, those are the good trades that you could that you can definitely take right away without even blinking, without even thinking twice. Just like, see, trading strictly this is very risky. If I only do this, I don't know how it's gonna go, to be honest. Because I see so many of these buy sell signal doesn't mean I'm gonna jump on all of them. I trade very selective stocks only because I want to make sure that it check marks, the rotation and stuff. I don't want to pick a buy signal in a weakening quadrant. I already know the rotation is rotating out, and buying something there is always a risky. And I do see those. The buy, like there's a buy signal triggers here at the same time I'm looking at the whole thing is just those are risky trades. Yeah, lagging to northeast directions are the ones that I'm always more interested in. I have a full list here. That's what I do all day. Scan, scan, scans. It just saves time. We can filter stocks, and which ones to trade, which one not to trade, which one they're willing to wait for the gee, it's taking forever. I don't know. I'm probably gonna dump this IQ feed data provider from Optima. I'm probably gonna get some different one. They have 100 stock limit. It gets on my nerves, you know, that I cannot move and run scans over 100 stock. It freezes up. So it's just, I don't like it. I don't like any limits when it comes to trading that you cannot do this. I can't stand this thing. Like stocks are like PLTR is something to watch. This is might have some positive signs in the coming days. So we played IBM, right? Look at what IBM did. So I picked up that one. Look. So in this case right here, why did I pick IBM? Okay. This is a 100 stock S&P index. So, but it filters by the distance, right? So I was really hoping that thing will stay back here, but you see how it curved here in the last few days. I was like, it's gonna hit that wall. So it needs to kind of little again, it's not it depends how momentum, how it is, it's going, like whatever the case is. It's just the curve is just getting too closer to the center point. Anyhow, so the point is like I picked up this one and then we got the buy signal. So the buy signal came, got a bit of a pop right there, backed off the single day, and then the next 2 days, you see, you came right back into that 200 at the wall. Look, didn't really test it, but when it came close to it. How do we come close to it is because we have an ATR, which is at 4 points, right? So you're looking at a point from 241, that low right there, the high right there is 246. That's an entire move right there. See, this is why this average true range right there, it is just, it helps a lot, you know? So I set up a target. I was like, okay, well, it broke below this 200. As you can know, it has a huge flush down here. And then ever since the price trying to recover, but you see the size of these candles, it is so like small, the range is just basically staying within this 4 point range. If you take the high and low, so anyhow, so I get the buy signal here. I open the trade because of the being on the 10th decile on the distance. It's like, okay, it might gain some, pick up some momentum and stuff and see if we can, if it holds it against the 236 and then see if we can come back up and test the 200. So we came pretty close to it and I closed the trade. I was like, okay, bye. Have a nice day. Done. Cash out the money and run. So this is just like, one of the trade. And then some of them like Eli really had a move. Fine. Then we can go to ninth, like stocks that they're like, ServiceNow had a quite a bit of, some uh, stock has been $800-900 range for a very long time now. The 10, 9, 10, 7, 6. I go far as 6. Yeah, I don't really, there's very few, like this is a fifth one here that we could have Adobe here in a fifth. But if we go to a 1, look at this. You really want to trade this mess? These stocks are the just, I mean, they're moving. They're not gonna move much. It's something with two. You see how close they are, you know? So I don't like same thing with Netflix. Like, okay, here's Netflix. Let me show you the example of Netflix. So here's Netflix and second decile. Look what the stock is doing. Nothing. Look what the stock is doing for the last 3 weeks. It has no momentum. How do you think the stock is gonna move? Look how choppy these signals are. So close to each other. So I avoid these. I don't trade this mess. We wanna trade something that is just here. These are big moves that stock will eventually will make. Okay, let's look at service now. From here, buy signal trigger at 865. Look how it is. Second day up, how close it got back to 846. They run these stuff. Why is that? Because same thing. 5200 pressure is down to the downside for so many days. So these buy signals that triggers that try to give you those nice entries at the lows, they do, work. And some of them are kind of get you with that little pin bar. And I don't really react like I'm gonna just completely like like close out the trade right away. I just want to wait and see if what kind of a the how the bar looks overall. If it's a lower bar, to see if to just to confirm the volume and stuff, just to make sure. And then I'll make the call to see should I cut it or should I hold it. And then from there, the price matched. But you see, now it's fighting what 50 and 200. It's right there. Next, then yesterday, no, sorry, Friday, it backed off by 11 points. It's just the wall. You have 50 right there at 926. You have 200 and 931. When you spend this much time coming all the way back up and come back into, so you're basically looking at 181 until 828. That's one full month. You always have to look at this way because these 50 and 200, they're not moving that fast. It's a 50 period, there's a 200 period. So when you spend 1 month, okay, below these two, what do you think is going to happen? Just instantly break out like this? Absolutely not. But this rotation right there, by the time it improves, gives us the decile print either on a 7, 8, 9, or 10. Buy confirmation triggers. Those are the ones, the trades that I'm interested in. And then we'll see how it goes. Now look at I still have one contract. I'm just letting it work. The ACN, I took this trade, right? So we traded this one. There's ACN. Same thing. I bottomed this one, which was in ninth decile. Ninth? Yeah, ninth. So I took this one, signal triggered, set the stop loss. Trade went all the way back up here to 255. Even the fact that 50 is here and 200 is here, as you know, this got a lot of room to the upside. So I bottom from here. I was targeting this fib right there, the green one, to 255. I booked the profits, but I let one. I'm gonna ride one that I have. I was like, I'm just gonna let that thing work. So we'll see if we can get up to 266. I says rotation looks good. It's pointing toward here. I said like we should be okay. So that's what I'm just letting one runner, you know, go. I mean, if it's gonna push up till here, if I have enough time, I could simply max out the spread. So we'll see what happens. Got time. So these are the trades that I'm hunting. Like, we what do we have? ACN. I'm watching Microsoft. Um, Google is strong. I'm watching Honey as well. This one. So the problem with this is it's been a sandwich in between 50 and 200. These are the suckers are very hard to fight. You see, it's between the 50 and 200. This range is just not easy to trade, so I gotta be a little cautious considering these kind of a trades. They're trading between the 50 and 100. They just it's like a ping pong, like a boxing when you go up, back off, back. It's just like back and forth. So once price will makes up his mind, then he has a buy signal, set up a stop, triggered on this bar. Stop goes on the previous day low right there, and it's fine. The rotation looks good, as you can see, but it's just the price action is right in between. So it did manage to have few closes above. You see, you got two close here below 200, bounce back up. Four down days, bounce. But see, like it's just becoming really, really close. What it is like the price is fighting this 200. You know, gives you couple days bounce, couple days bounce. You see, like it just finally made his way out. Then you got hit with a 50. So it's just this range has to break first and then it will give a better read. So that's the hedging game. But for you to do yeah, but we don't, you have to understand, like, if you don't know, nobody knows these downsides and upsides. It's just you have to just understand that part. How much of the price is gonna fall, and we have our fibs, okay, and we have the best fibs ever. So you have to um, let's go to S&P. See S&P right there, a daily chart, right, has a buy signal that triggered back here, which was on April 10. I mean, fine. Look where the 50 is and where the 200 is. So the 6,200 that we're talking about last month, that's a 4.5% drawdown, right? So we're looking at do whatever the 62 right here to this low, to this high. So we have a high and a low right there. Change the color to pink. That's your range for this September to break either side. 6,500, 6,508 all-time high, 6212.69, okay, to the downside. So from here, it's 8-1. That's what the candle is for. So the whole month, this was the entire month that we just had. From here to here. So 8-1. It's the whole month of price action. So the low is 6212 and the high is 6508. So here's a 50, 62, 99. 200 is at 59.99, 59, 59.55, which is right here. That's the 50. 5 is 64.67, and we closed at 64.60. on Friday. RSI right now is at 52, which is a neutral. So market is not even overbought now, it's not even oversold. It just sits in the middle. 15% right there, the implied volatility. DTR, ATR move is 50. Friday session was 47.19. That was a 94% move was done on Friday on over a first 1 hour. Well, after 1 hour, it was the rest of the 5 bars were just literally sideways. So we take 64.60, take a 50 to put us at a 64.10. That'll be a you know, 1 ATR. So if you buy 100 points down spread from the current price, so you're looking at double the move, okay, from here. What makes you think that you're going to have double move? It's going to happen. Can it happen in a job report? Possible. Can it happen in a CPI, PPI? Yes. I would just, any bet to the downside has to be start off on the current price minus the 50. That's if you're dying or to pick a top, that would be your first approach, first way to see like, okay, if 60, what, 64.10 would be your first strike from the current price. I mean, Monday price can move up 15, 20 points, so this can go up to 64.20 or it's probably 64.30, depends. It's just going to be your first strike price. Then from here down, you can take 50 points. That's your spread if you're willing to pay that debit. You're making a 50-point wide spread. You just play with a number. That's what it's telling you right there on the screen. What is the expected move? Because you're not going to get killed on that time decay. Doesn't I don't understand. Like market can go up 10%, just gonna come right back down. I mean, anything can happen, but it just this kind of a big upside, most likely you're gonna price to go sideways. S&P just not gonna flush out everything in a one single month. But everybody wants to pick that top, and they're the ones that are like paying the biggest price. I've took a few puts here there. That was just on a 1 hour very short signal. Those are the ones if I'm more comfortable doing those instead of put something on and just hope like, oh yeah, market's gonna roll over and just we have the weakest month and this and that and I mean you're just making a whole picture and you want to go down 200 points from the current price and the overall screen doesn't even give you that print and but you're just hoping for a massive drop. It's just all opinions that you have and you're sitting in your head looking at 2 3 posts on Twitter thinking, yeah, there's going to be some crazy, crazy drop is coming. I mean, anything can happen. I understand that, but you gotta be play within a range, you know? I would, I'd rather have something up here. Let's say if I would make something here for 30 days, and if we do get the drop and we kind of go like this, I'm gonna max out that spread. You know, but making something here has a bit of more bigger, like, yeah, you're hoping for expected move for this entire move to happen, but then when you're gonna come back here, it's like, wait a second, you just going way too far down. So unless this turns 50 into 100, I mean, this thing goes up from 94% to 200% in red. Yeah, that's your day. But I don't, why I was 50 is at 63. 63. So I said, I mean, from here to here to this print, it's a 4.5% move. A 4.5% move from this high to this low. Instead of considering this low, I would target this low first to confirm this. Because the swing right there is clearly making higher highs and higher low. So for this would be the ideal target to see if the price come back down and retest this low right there. If it does, that will put up a new low right there from the high, is to take out the first initial low of the prior swing. From here, this will be the first low. Then the price gonna bounce, put a lower high against this high. Then from here, you're looking for a lower low, is to take out this low. That's the plan for September, for all your puts to play out. You're fighting a higher swing right now anyway. Directions are up. Instead of targeting this, anything down here, yeah, I mean, those are obviously the most cheapest spread that you are possibly going to put them on the board. They're going to have a massive reward, but just way out, you know? I would target this low first to confirm the low from the high, 64.43. So you just, And if you think that market is gonna go sideways, which is possible, it can just go in the inside month. You just construct a butterfly, something around here. Buy here, sell it here, buy something down here. Kind of like stay range bound for the whole month. 64.43. Okay. 64.60 minus 63.43. That's 117 points. 117 points from the current price. ATR is at 50. You know, the ATR line is sitting here at this print, the blue one, 62.30-ish. Yeah, right here. 64 kind of 30 range. 64.30, 63.43. Hang on, let me do. S&P is not an easy index to price out trades. Keep that thing in mind. At 85, have to look so many things. 85, 85, then yes, 64. Because anything you're gonna come close to the money, you're gonna pay a lot more money for it because premium is gonna be expensive. Yeah, of course. Nobody knows that. I mean, full, I don't. The thing is this, I don't even have a sell signal. Okay, I'm just throwing it out there, just to entertain some, people who just dying to sell puts. We don't even have a sell signal. If I'm not buying anything without a buy signal, why would I sell without a sell signal? Does it make sense? When everybody is on a one side thinking that this will happen, then that usually never happens. It actually goes against it. A collar hedge, you need to buy it as well. How are you going to put a collar hedge? You're going to own um, stocks as well. The collars are against your portfolio. You're going to own, I don't know, uh, shares. The butterfly is the way to go. I wouldn't do any other thing. And I'm not gonna. Just what I'm saying is just like there's no point to fight. I mean, if you're getting excited over a single session, that's different. But we don't even have a a cell signal. It's tough to just throw money and just burn them. It just because September is so damn bearish. Change it here. Let's look at the. I didn't even change this one. Okay, here's September. Okay. So it doesn't like see everything triggers here toward the end of the month. But that if it plays exactly how it how it's laid out, But if we let's do Mag 7. So here's S&P. So here's Nvidia. First 2 weeks are rough. Tesla looks good. Oh no, I haven't changed this
So
thing.
in August.
This is still August. How many did I change? I posted this thing. Change this one by one. Hang on, let me.
August is over.
Yeah, I think I did it there, but yeah, I posted here. Here's September. I'm gonna change those one by one now. It's just like okay, the video here you see now we know like it's just the video looks kind of rough. So does Apple. You know, these two looks little rough here. Microsoft has weaker start as well. So does the Google. This is the one I want to watch. This is the one we're going to keep a good eye this month. Amazon looks really good. So we're going to keep a keep it a good eye on Amazon. In my Netflix looks okay, but Netflix is just the rotation is in that third decile, remember? So it's kind of a little choppy. Meta is, we'll see what happens. Meta is due for a bounce. Back to 750 or so. Microsoft, Nvidia, then we have Tesla. Who knows? Half down, half up. This stock is just more and more. I mean, more and more I look at the stock, more I hate it. It's just, just an ugly price action. Just like if you look at, I mean, let me ask, hang on. The September 2024 return was 2.2%. 2023 had a decline of 4.77 or 4.87. 2022 was about 9.34%. So September is a little rough. There's no doubt. Absolutely. There's no denial there. We've been talking about this 62, that is the 6, the 4.5%. I mean, if we double that thing to 9.34%, that put S&P black back to the flat line at zero year to date. I don't know. I don't think it's gonna happen. Worst case is if we do roll over, give half of it, well, we're looking right back down to 6,200. That's the worst case I can make. But I can't. Weekly side, I don't have anything on the daily side. It's just a tough bet to make, to be honest. We just guess. It's just a guess game. I'd rather just trade exactly what triggers on the screen than act on them instead of sitting here making a full bearish case and just throw the hedges on and just hope for the miracle is going to happen. It's a very different approach. Very different approach. Let's look at sectors one by one. We can look at them up here. Industrial, same kind of end of the month action. Communication definitely looks pretty rough. Technology, look at this. It's just like the world is. Financials, utilities, materials, energy. You see, like, just everything in the last 2 weeks that gets pretty heavy. Real estate, consumer discretionary. You see, this is where the Amazon is. Last week here, you see, like, here, healthcare. I don't know. I mean, last 2 weeks. I mean, I don't know. What should we do? Call, take a vacation? Trade the job for 2 weeks, call the last 2 weeks off. Who cares? And there's nowhere it says that you have to trade September. Trade half the month, take half the month off. Best way to do it. Doesn't have to be involved in the market all the time. It's just I have two down, but we have nine up, and you need you gotta make a case of a weakness. You need to find weakness first. Then, you know, but the early move, but those are the ones everybody trying to catch. Either you wait for the confirmation or you say like, well, I'm gonna throw it out there, see if it's gonna stick. So if wanna do that is yeah, I'm watching this. This is if this thing goes up like this, yeah, you're goodbye to your puts for September. September will go positive. If this is just with the timing, with the bearishness of this month and how this rotation is starting to look like this, this is something to watch. We're gonna be tracking this every single day. How it updates. Because right now in the growth sectors, you can see XLK is outperforming the communication and the industrial. See right there? 13.14. XLC is at 14 and a half. Industrial is at 15.77 year to date. These are all year to date ratio numbers you're looking at the side scale. Energy is 4.3, XLY 4.67, real estate 5%. So these are the ones. XLB, which is the materials, and the XLI, which is financials. So materials and financials. And the same, it's just like, I don't know. I mean, is there constructions going everywhere in the world right now, in United States right now, or what? Looks like that AI data center with this industrial, and obviously that makes more sense anyway. So healthcare flat, consumer staples three, swing is down, and we have utilities. Just 10%. That's very hard to believe utilities up 10%. I mean, that's crazy for this thing to. They're like most of them are like weird gas companies and stuff in this stock. These are all the utility stocks. They all start to rotate out again. AES Core, this American Electric. I mean, it's just I don't even CMS Consolidated Edison, Dominion Energy, DT Energy, Duke Energy, Edison Energy. There's like Pinnacle, Sempra. This thing is almost sideways. Southern Company. See, most of these swings are down. How does this thing manage to rally 10% this year? Look at this flush out here to there. Yeah, most of these swings are down anyways. Dominion. Yeah, these 11% swings to the upside is the one that pushes this sector to the upside. Come on, man, just a sideways chart. You gotta didn't even made a new high yet. 103.59, still 104.10. Yeah, I mean, it's a very weird sector to trade. These very low ATR stocks. It's a $12 stock. I mean, stock is in a clear downtrend anyways. No idea what driving this sector so much. Um, gotta change this thing. Um, I don't know. BaveCon, we'll see. I don't even have anything on the queues either. See, got a buy signal here, as a matter of fact. I don't know. Is this? We'll see how this swing goes. Kind of. I'm thinking this. I could be wrong. This is what I think. It's just to stay a bit of a like this. That's what I think. something like this to happen. But IWM, nothing. So what I'm saying is just it's just a tough bet to make. I mean, SPY, nothing. CRM is going. They got the earnings coming up. Just gonna looking at the stocks here on their side. Um, UNH. I don't know. It's kind of it's gonna be updated. Amazon is the one that this one. That rotation looks really good on Amazon. He's making the same move what Google did. See, same thing. I would give about 50 in this. Or we'll see. Me, this thing breaks, it's gonna go. This right here. So we'll see. It's definitely we're gonna watch. The high volatility is all 27. How to say that neutral 53, DTR 4, 222, 50, 200, 209 is way down here. This is, I'm going to be interested in Amazon. Take a swing at, see how it looks. It looks a little coiled. The all-time high is 242. So let's see, 225 is the ATR pivot. 242. Yeah, dude, like give or take like 230, 240 call spread. That'll be nice. Just to, yeah, 240, 230, 240 call spread would be, or 230 calls. How's the Mag 7? Yeah, see, it's just rotating out. Let's see. Put XOK here. Let's see if we can do. Yeah, it's almost gonna be the same. Put an ETF here with an S&P. Okay, so what do we see here? We have Meta here, which is fine. We have Microsoft, Nvidia, XOK and QQQ. You see how close they're all getting right there. These are the suckers to watch. This, these two names that has pumped the market all the way to the upside so far. I don't. I mean, if you ask me, I don't think September was, to be honest. Just this rotation in the next couple days, it's gonna start showing. This is not going this way. You all know that. This is not gonna happen. This Let's keep an eye on it. Look at this. The midpoint is 349. And Tesla is just, I have this wave count here, which, I mean, I don't know if it's going to go this way or whatever the case is. So 1 2 1 2 count. I don't know. I don't know. It's just declining. Say it's just like it's very hard to put a price tag on this chart. There's nothing good or positive about anything, but price is a price, it's gonna move first. It's a very clean wave count with a clear five waves up, three down, five up, made a higher high. See, took out this high, made a new high, 355. We just looked at them. Remember, I always says about midpoint, always 350. 349.09 is the exact. And 355 backed off, now down to 332, right in this zone. So the rule now is this two has to stay against this two, has to stay smaller in the percentage range compared to this two. So this one was 9.85. This one was 6.58. 9.08. Yeah, if Tesla starting to break this 322, yeah, this 1 2 is gonna be it's gonna be a tough one to fight back to the upside. Yeah, this area right here, we were at 333 now. 329 is the one, it's a 61.8, 78.6 at 322 against this 314, which is this low right here. I mean, this is looking for a third of a third breakout. If this happens, Nobody's going to get a chance to get in. This is the most powerful wave of an Elliott wave when you get a third of a third breakout. So you have to ask yourself, like, what miracle is going to happen for Tesla for this third of a third breakout to happen in the weakest month of the year? The market's going to get heavy. Well, I don't know. Tesla's going to, how Tesla's going to do. It's a very, I don't know why we should have at least get to 368, at least like a measured move. We haven't even got there, you know? You see, if you take 297 to 348 projected from 314, the exact measured move is at 368. We only stopped at 355 and we just backed off another 6% down to the downside. I mean, this is a very aggressive wave count. There's absolutely no denial here. And if it managed to find support and but it has to come back up to take out this 355 first to make a higher high, because we were on a swing point. That's your high swing, right? That's the higher low. That's the higher high, right? Because it went above, oops, it went above this high, right? Made a new high. This right here is the higher low again. This is what and if this zone holds, we need to look for another higher high above this. This higher high swing right there, if you label the whole thing, put you into this third of a third, so it's a very aggressive wave count for this swing to go nuts. This wave, when the third of a third breakout happens, you're not gonna get hardly any, gonna see any pullbacks. It will have acceleration gaps, one or two of them at the open that those are not gonna even get filled. It's very common for third to go this that it just it's a very powerful wave. So you'll get the gap at the open, move it just a little bit, boom. It just There's going to be hardly any pullback. Then you get another gap at the open. It just the price just accelerate. It was a very hard to get back in for these. But I don't know. I mean, it's gonna happen. It can happen. Who knows? Because I've the other case is is just to keep it more sideways. We can do that by opening up this triangle even more. So it could leave some more room like this. Get rid of all this. You see? You can just chew more time with the rest of the market. It's just the point is this. Okay, there's no clear in upside unless this range breaks. However you want to do it. I had a guy commented yesterday, he's made some somebody is doing this, one and two. How in the earth a wave two can have a triangle? It's just this kind of a nonsense when you see on Twitter. It just pisses you off, to be honest. Read the damn book because you're so quick with your labeling. It's just this sideways range is it's been close to 16 weeks now, pretty sure. Weekly wise, I believe. Take this high to this low. Yeah, it's been 64 days. It's a 64 bars. So 30 for 1 month, 60, that's 2 months. The other thing we can make is this. I know you, all of you are just love Tesla. First, this way. It has a, yeah, that's what I think. You ask me, I would go with this. Green. The thing is this, we need 8 swings from any low. Then you can, this is what it is. We don't have it. From this low, from this low, from this low. We need this. 5 up, 3 down, 8 swings from any low. Once you have that, you have a confirmed low in place. You see, like, okay, if we make a case here, the 1, 2, 3, 4, 5, 1. What kind of a second wave is this that has spent twice as longer to the sideways, being sideways against this? Okay, fine. Let's make a case of a two. Where do we put two? If listen, you have this low, you have 5 waves up in a one. How do you make this two? You had a fun initial drop. You have 3 swings here. Low, right? So you have 3 swings here. So if we stop our swing at this low, so we count this as a one, two, smaller one. I mean, so we're doing a 1, 2, 1, 2. It, no, I just the time and the percentage range is just gonna throw you off. the initial drop here was 25.69%. 25.69. This swing was 19. The rest of them are all smaller and smaller, as you can see, against this one, right? From this high to this low. So all these ones, this one, this one, this one, see, they're all getting smaller and smaller. The price is just starting to contract, like just it is starting to look like that it's trying to form some sort of a wedge. That's what most of the time the price contract into a wedge pattern and then it breaks. And making a two is just that's what I did. This is the right way to do it. And if you want to start the count from here by making it one, two, three, four, five, put a one here, WXY as a two, and then put this as a smaller one and now smaller two. And then from there, you can make the case of a third to the upside. There's no other way. So we could show you this way. So we can actually see it. We don't need to go that far projection because we don't have ATR and standard deviation goes that far anyways, right? So we just get rid of everything. I mean, you really want to push two here, that would have a lot. I would rather keep the two here. See, right between 38 and 50, which is fine. This is just it needs to break this 367. That will change. You see, you cannot make that many smaller subdivisions. That's what I think, to be honest. No other way. You can do this. Then 78.6, which is fine. Perfect. From here, you can this is a very clean looking diagonal here anyways. Perfect. Yeah. And now the minimum downside of a diagonal is always going to be a prior fourth wave, as you all know. It'll be 315 right there, this print. Your minimum downside target, 315, 314 and 60. Diagonal always retrace technically to the wave two. This is where they actually start. But minimum downside is always going to be a prior fourth wave. I would say probably 95% of the time. Diagonals always retrace back to the prior fourth wave. We looked at them before in many sessions, so I don't know. I'm just gonna leave it like this. There's nothing else you can move it around. We just deal with the ABC drama now for the next. I don't trade Tesla since last week or so. The last trade we did, we had a leap open, but that is fine. So we logged too much time out. 300, I think 300, 325. Um, and the last one we did was the tier two trade, the calendar with the vertical spread. So I didn't trade Tesla last week. Just it's tough to trade this nightmare. So we'll watch. Keep an eye on this one. Keep this one as a backup, so it's a little bit different. This is putting a Y here into a triangle, then from here, because I need 8 swings. That's it. That's all I want. You know, that will give a much clearer roadmap. Here we just don't have it. I know it's just these are all 3 3 3 subdivisions. Three down, one, two, three, three up, three down. Just need 8 off the low. If we make the case here of 5 and 3, that's 5 3, that's 8, which is good. So now we have a smaller one, and now two, and then we have the third of a third. Okay, so we can do that. But in this case here, is this wave 2 here takes more time to complete compared to this one. This one will make a move above 355. It's gonna go. This one, it just takes longer. That's all. The only difference. So, but we'll keep it both side by side and we'll see which confirms the other. Remember you cannot have one single wave count and just, oh, I want to load the bazooka. It's not how Elliott works. You have to think how you can structure a wave count and to see both would have the same outcome in the end, but one will take longer than the other one. But then in the end, in the next couple of week or two, you will have your answer. You will know that which is this wave count is right, but is gonna chew more time on the clock to complete the second wave. This one right there is gonna move. When it breaks 355. You need now we because we have swings, right? Now we just talked about higher highs and higher lows. So this one right there, we're just gonna see like, okay, but as long as it finds support here at the price managed to reverse back up, takes out the 355, we have 368, 375, 370, this 372, right to this zone. This is gonna be our first upside target zone after breaking 355. So we're gonna reach this 100% quality and this 100% quality of this. And then from here to this. It's the second zone. We have 161.8 from going from this and this. So I have two zones going up and, in order for this to play to the upside, price needs to make a higher high above 355 and it must stay above 315. This case here, same price comes back down to minimum 314.60 of the prior fourth wave to confirm this second wave against this diagonal. Okay. So the point is that one wave count takes shorter time to make a move back to the upside, and the other wave count will take a longer time to complete the second wave. We will find out which one is right. And I know for a fact that the one is going to be right. Both cannot be wrong at the same time. If we'll make the case of September being a heavy month for the overall market, I don't know what's going to happen, but nobody knows. But I mean, if the overall market is going to get heavy, you think what Tesla is going to go by itself based on what? Well, based on what 41% decline sales in Europe that were that were up in a third of a third breakout. It's just I know it's a tough case to make. It's the problem is this that this entire price right now is fighting this move. Okay. We had this initial move from this low to here. Then ever since because if you had this move, this is the all-time high right here. You had the initial move to the downside, right? It's a huge drawdown, over 50%. This move right there is always going to be a risky move, right? And then from here, yeah, the price is literally sideways. That's what it is. The price can go up like this, but it's still going to be fighting the overall downtrend here. This is just not a good sign. This is like over like almost 56% drawdown from peak to trough. This entire decline. It's almost 56%. So you have to look at this that this price right here is fighting this. Well, we'll start between depends on where we find the fibs. If we have that's what the fib support is. So well for now, I mean swing is up anyways. So let's stay a little bit optimistic and stick with this one for now. And keep this one for now and see what happens. You know, so has if you would have asked me my opinion, I mean, I would prefer this, but it's not up to me to make a decision when the price is going to move. But it's a very clean 1-2-1-2 count, But let's see if it managed to hold this zone right here and see if the price managed to push to the upside. Mm, I'm gonna show you I don't, this other thing is kind of too early, but hang on for a second. Mm, This is what I'm working on. The sentiment. This is a weekly chart. Um, it's just pretty amazing results, to be honest. Very impressed how the I'm trying. I mean, it's not gonna be the same. Like it's because it's a totally different. I'm just changing here. They're clicking on the watch list. What do you see here? You see like the sentiment right there. What stock is this? This is Charter Communication. Pull something else. Oracle. Oracle. This is a weekly chart. Oracle got a sell signal weekly chart, right? So now you got to look at this. When does the actual buy signal triggers on which weekly bar? And when does the sentiment actually improve, right? So you're gonna try to see that. Here's Oracle, triggered a buy signal here, stops here on the previous weekly bar low. Price has moved up until 6.2 weekly bar. That's when this week closed, is when the sentiment improved. And you see, it's just on the weekly side is still good. I mean, now it's starting to show some weakness for sure. So we can look at, there's so many of them. Like, notice where the sentiment improve and look how the price rallies from there. And where you get the sentiment that goes negative, and that's when the price rolls over. Look at Meta, buy signal here. Look at the sentiment here. Look how the price has moved. The weekly has a very good results, but if you notice one thing, that the signal fires first, sentiment improves later. That's exactly what I want. I want a much better entry than the actual wait for the whole crowd to tell me like, yeah, people are in this trade. Look at Tesla. Tesla weekly is good. Daily is a mess, you know? So Tesla has a buy signal on the sentiment right now. It's at 18, but it's choppy. That's what it is. This is why I'm just showing you the case of one taking a bit longer than either way. I mean, stocks should make a move higher one way or another. But when? Well, we don't know that. So we're just gonna watch every day. Look at Broadcom. See, from here, look how much upside you get. This is a very good look at Nvidia here. Weekly has amazing, amazing. Look at AMD. What I'm trying to do is to see if I could. It's a very complex scripting. It's giving me a freaking headache, to be honest. But I'm trying to change few things to see if I can just kind of like bring this line close to my buy signal when it triggers. It's a tough one. It's just, it just doesn't, the ratios just doesn't lines up. But it's just the filter to that I will be definitely going to be using a lot more considering trade. I mean, the trades that I still take based on these swings anyways, which you all know that. But it's just a matter of like, if I get myself in a weekly signal and the sentiment improve, man, those are the ones I'm gonna sizing up those trades a little bit more.
So Mo, is the sentiment indicator at the bottom, is that your proprietary indicator or is it
Yeah.
several phone calls?
Well, it has conditions based on volume, based on RSI, based on like neutral. It's all about accumulation and distribution in the market. Okay. So it's like think of a signal as an ignition switch. It's like a fuel gauge, right? So when it fires, basically when the line crosses above the middle line, right? It's like what stock is this? Can I see? Microsoft. So if you see right here, it's not that far. The buy signal on my buy signal triggers is 428. Look how the sentiment improved at 505. And look how much upside you got. You just have to understand, you have to look at this. This indicator is different than this, but it has um hang um see you got a signals that they're triggering right here, but the sentiment has not rolled over yet. It can, if this plays out over time. But again, this is a weekly time frame. That's a long time. You have to be super patient to play a weekly chart, because there are just some of them going to be very tiny, choppy weekly bars. Some of them are going to have explosive move to the upside, but it takes a very long time for any signal to play out, So I think it's gonna be good, like Amazon right here. But if you notice that swing picks up much faster entries, then sentiment improves way after that. But it depends. Some of them are, you cannot compare every single chart. But I'm just showing you a bunch of examples. Like when you basically what you see is here is like when does the actual weekly buy signal triggered, right? And after how many weeks the sentiment has improved, and then from there you can see yourself that how much the price has been rallied ever since. But what you're looking for is when the sentiment goes positive, is when how much the price has rallied. You can see it here one by one. That's what I'm just trying to show you. See IBM right there has negative sentiment. So it's gonna struggle somewhere around here. So I got out of the trade, which is fine. It's a little small counter trend trade. But when you are looking at a weekly time frame, you don't have to focus on a daily time frame. Keep that thing in mind. Those are day-to-day noises. If you have a long picture, you see like here, sentiment improved, price rallies. So it just look, buy signal here got even tipped over. I don't know what stock is RTX. And this is daily is a little tricky to be honest. I'm just kind of giving me a little bit of a runaround. Weekly is amazing picture. It is just amazing. Look at Goldman Sachs. Since 5 of 5, that weekly bar ever since when this week. And look how much upside the week has gotten from here. Yeah, it's mostly it's an RSI is like it measures momentum. If RSI is high and rising, it means buyers are aggressively pushing prices higher. So it has CCI, they put them in there, which is they call commodity channel index that measure the deviation from the average. A strong positive commodity channel index is trading well above its normal, and again, buyers are in control. And then you have the volume, balance volume, that tracks whether the buyer is flowing in with up days buying or down days selling. The rising OBV, we call on balance volume, the buyers are accumulating. So it's mostly like more like an accumulation and distribution phase. We always talk about the price, two phases, accumulation, distribution, accumulation, distribution. That's what the market phase is. You have you have market phases, and then you have the actual zones that does your upside projections. If then the price does make the higher highs, what are your upside projections are? Those are your targets, and that's it. I mean, there's nothing else. I'm just, I'm gonna mostly, this is more, I mean, if these trades, I would say, will be ideal for shareholders and for like a long dated leaps. You can either do spreads or you can just buy leaps. If you had a buy signal and if the sentiment improves, you can you've seen these results, how they're excellent. I'm not getting a really there are few stocks that given a very good read on a daily time frame, that when does the actual buy signal trigger, and then when does sentiment improve, and then how much of the upside that you got. That's meaning that the buyers are in. They're just gonna push the price higher. And daily is I'm working on them and see I can try to twist a few things around and see, but weekly is impressive. I'm pretty impressed. You know, Costco. See the price under pressure right there. That's why I don't want to touch Costco yet. The sentiment is weak. Weaker sentiment, we gotta be really careful with the buy signals. You see this line right there, it's still curving. This is why the price is under pressure. If it's starting to curve back up with the buy signal, yeah, then we'll be interested in, and then we'll see how the rotation looks like. We have powerful tools. No, you don't worry about like this one. This is a new one right here. The Texas Instrument. It has a positive right there, but the problem with this, it got hit hard with earnings. So it had a huge run, as you can see. It came all the way back down here toward this 100 and 200 EMA, and then it just trying to, from the last 3 weeks, see is inside week, higher bar. Then it ended the last week with another inside week as well. So it's pretty much trying to recover this entire. That's a massive, huge weekly bar that earning flush out. So
Can you show crowd, ZS, and shop?
yeah, so this is buy right there. You see the Boeing haven't. It's been pretty steady. Haven't got any negative sentiment. The people are it's been bullish. PLTR right there, Palantir. You see, I mean, you can see when sentiment signal fires, how much upside do you get? Look, last one from here. Haven't got any. That's why the stock went so crazy to the upside. So weekly is good. It's just the daily is gonna change everything because you're gonna go back to a shorter time frame. Um, Apple is good. We'll see. Apple can manage to make a move. Apple weekly is fine. It took such a long time here because the price has been so sideways for such a long time. And now it's trying to make its way out. So it's just, on S&P 100, uh, there's ZS right here. ZS has a weekly sell signal that triggered here on 714 on the bar against this high. Price has been it's been down for the last 3 days. Hasn't really turned negative yet. So there's buyers coming in this name. So the demand zone is trying to form. So we'll see what happens. You see, buy here, the mean reversion here, sentiment improve. You see, the last time it got flattened out real close to that zero line and just went right back up. So if you look at S&P, the SP SPY, a SPY weekly sentiment is improved on 526 weekly bar right here. Signal triggered on the 428th weekly bar. So basically, signal fired on this one, it actually appeared on this week, which is on 505. So now if you calculate 505 until 526, so it was basically a 3 weeks, 1, 2, and 3. This took 3 weeks after the buy signal triggered, the sentiment improved on a weekly time frame. And then from the weekly time frame, we've been rallying ever since. At a 47 read right now on the scale. It is absolutely nothing bearish about the market. Same thing with QQQ. Buy signal triggered on this week, which is 505, 526. That's right there after 3 weeks. Okay, sentiment improved. Got a buy signal triggered on this one, has improved ever since. It's a great filter you can use. But I wanted to see if, because the swing counts, what is working here with these buy and sell signals, and it has nothing to compare with this. This is a totally different game, but this is gonna help a lot. You will see, because I'm gonna be scanning stocks that I would find based on the rotation and the weekly time frame that I'll find a signal as to buy some shares or buy some long dated leaps and stuff. And then from there, if the if the sentiment improves, gotta stay in that trade. Don't even look at any day-to-day BS. Stick to the plan. Stay and ride as long as we can. So okay, Merck. I'm watching this one. The only problem with this is just this 100 and 200 is way up here. So if the price does manage to make a move, it's gonna hit the wall real hard, really hard. You can see how long this price has been down, just it's gonna be choppy and stuff. So we'll see. Yeah, I'll keep you posted. Don't worry. Don't overthink any wave count. Day to day basis, we track Tesla pretty much every single day anyway. So we'll see how the wave count goes. So it's just a matter of like one is gonna take a little bit longer than the other, but it's just a matter of time. But you have to understand one thing, that it's difficult. I mean, I don't know if you can think or come up with some reason that I'm missing on, or if I don't know, you can let me know. But it's very hard for me to make a case for a stock to break out in a third of a third breakout. you know, on the most like a bearish month. And on top of it, like what? The last thing that we got this week, last week, was what, a 41% decline in Europe in sales. I mean, these kind of a things is not gonna help the stock. It's just look at their earnings. It's just, I don't know. That's why the stock is just literally sideways. It's trying to maintain and hold that 1 trillion market cap. That's all the stock is doing. That's how I see it. Every time it's trying to come close to that 312, 313 mark, it just try to bounce right back up. It's holding that 1 trillion market cap. It's a tough case, but we'll see. We're gonna watch. Um, we'll see. We'll get a. I don't know if you have the the 300 whatever the entry that trade is. I think is up at over $600 or so. Got the leap here. Let me see. Just so many. Yeah, 300, 350. This was right here. I have shares, as you all know. I've been holding. It's June 5th, 20th March 2026. It's for next year for the first quarter. 300 and 350. We're both in the money last week. They're gonna back up. It's okay. The 1760, I think it's like up like 600, $700 so far. But we're just fine. Got plenty of time. So we'll see. But we'll swing more. I have shares and just looking at more kind of clean, better setup. If I, can can f- is job is just if you have enough capital and if you just want to buy shares, just buy the shares. You just don't have to sit and fight your life over time. You know, if you want to just you're fully focused on options, you can either do a very long dated leap, okay? Just go out next year to the second quarter. You don't really have to sit and stare at every day-to-day price action when you have almost 3 quarters to go and just give some time. I mean, I know it's just I'm trying to make a case. I mean, I love for this price to break out, but at the same time, it's just not happening, you know? It's a tough case right now to put a price tag of 500 or $600 on on this stock. You're looking at almost about $300 stock to become a $600 stock based on what? Think about it for a second. So you just and look at Google, you know? And Google, we are in. I mean, I got an entry right here. I mean, I think we got a really good entry on Google. So I don't know if some of you guys are holding shares, some of you already dumped it, but this is a stock you gotta own. I mean, any dip on this stock, just buy the stock. Every 5%, if you can ever, we, if we get any weakness on Google, I would just accumulate shares over time. This is a monster company, man. I mean, I'm not joking. I'm not joking. It's a cash machine. How much money that they make, it's just insane. Look at their net income. You'll be surprised. Look at the sentiment right there improve. See? Look at this. It's a great tool that we're gonna be using really, really soon. Yeah, I'd rather stick with You see like sell triggers here, the price stays under pressure, sentiment does not improve until all the way until here. So the real buyer stepping in, starting to showing up some. So I mean, I think even the fact, let's say if you ignore the signal, and if you do happen to buy on the week of when the sentiment actually improve, I think you still have a pretty good chance of making money back to the upside. Again, that's on a week to week basis. Keep that thing in mind. These are 1 week bar. So it's a very very long time frame. Yeah, just whatever crowd strike right there, negative sentiment right there, triggers in this, which is really recently, last month on the first week. Yeah, that's why I think this stock hasn't really moved much. I think they had earnings last week, I believe. Yeah, it has negative sentiment right there. That's why. Price under pressure. There's more sellers than more buyers. Plus, it has a sell signal. So, back to this sell signal, and then the sentiment improve, the went negative here. See how it confirms? I'm telling you, this is pretty good. You're all gonna love it. Just wait. Um, Wood is fine. Wood is okay. Um, what is good from here has been it went a little negative back here for 2, 3 weeks. No, from here, 324 until 505, and then improves back up again. It's been it's been good. It's kind of it was at the very peak here at 75. That's the peak that I the upper line. That's why you see the from here the price is kind of goes choppy. One, two, three, four, five, six. So from this last 6 weeks, price is just literally sideways, not as an uphill like this. So Shopify is good. Buy signal triggered here on a 428 on a weekly time frame against this low. Sentiment improved on the 526. Has been improved ever since. Price has been rallying, so does the ratio price right there. So yeah, Shopify is good. Um, what is this ETH? It's good. It's fine. Ethereum Trust. Yeah, it's improved here. You got a mean reversion buy signal triggered here. You see, my signal is always gonna come first because they're different scripted, so they're all based on swings, So um, then sentiment actually improved here on the 6/30th. It's been, you see, like you can see this upside. There's your sentiment line here actually, um, um, proves it right here. So, so the bottom line is this. Let me show this. I can change this. I did this. Let me see. I put up a buy sell, change it to a week. Now I got a watch list here, as you can see, of an S&P 100 that tells you that which stocks has a buy signal on a sentiment on a weekly time frame and which are the ones are neutral, meaning that they're like if I go like Eli Lilly right there, it has a weekly. Yeah. So these are the stocks are been on a neutral side. These are the ones have a sell on it. AIG sell right here. So these are the negatives, basically negative sentiment. These are the ones that I am not going to be interested buying. Starbucks negative, LMT negative, Comcast, Adobe is negative as well since here. It's got a weekly buy signal. So keep that thing in mind. This pig right there, man, got rolled over on me last week. AMT. You see how it went negative last week? Um the daily, it just, the weekly has a negative sentiment as well. Colgate, Costco, we already looked at them. Dow, DE, Target, ACN, UPS, Charter, and IBM. So these stocks right here in the S&P 500 right now has negative sentiment. Rest of them are good. Apple, I looked at them. So as long as the sentiment stays above that line, it will have the buy signal on it. And then again, this is the, you don't sit and watch your day-to-day sessions like normally some of you do. They'll sit and doing those babysitting every single candle. These are very long. These are if you're a shareholder, this is the this is exactly what you want. Um, Wells Fargo, you see like signals and stuff, they triggers. But if it's a matter of if the sentiment goes negative and if the signal plays out, that's the key. But the best entry can change this thing. You can go back to NASDAQ, I believe. You can do NASDAQ 100 stocks. That gives you, you can filter this. So these are the stocks has a positive sentiment right there. Tesla's and Tesla. Millie just got one. Just looked at them the other day, last week. This bar. Millie is getting looking good. Microsoft is fine, but it just, I gotta watch this. App loving is good. This is this is the beauty that you want to catch, man. So I don't know. I'm not just too lucky on this stock. I've traded twice. It was okay. Second trade was okay. One first one was fine. It trades really weird. Look at this. This weekly buy signal and this at the same week. This is the beauty to catch on a stock when it triggers. You know? Now you don't really match them. See how they run stops to the downside? And look how sentiment's been good. It's been pretty choppy, this Lindy price, the industrial stock. QCOM getting better. I think QCOM is gonna break out above this 165. It's been fighting this. This is a liquidity trap for this stock right here. Might might buy this. It's gonna crack this range up here, 165. So the play in this one is just, I mean, I don't know if it's just a month or what a month is gonna play. This right here, it's gonna break. So yeah, this 160, 160, 165 as a weekly time frame. The I might consider some. Uh, no, where my watch list? Here. Roast we already played. Yeah, it's been. See how it's running out of gas. Has hardly has anybody too many wicks. No, Tesla is good. So these are all has buy signal on them. So these stocks are all good until the sentiment will go negative. Then it's gonna start coming back down to the bottom. That's it. So like ASML has nothing. You see, it's like right at the flat line. So it's not gonna it just it's flat, has zero sentiment right there, right now at the moment. So that's why it's neutral. So N is gonna say neutral. Buyers are in, buy or sell. So best way to look at them on a weekly time frame. Yeah, these are the ones gonna reward the most, who's gonna be mostly shareholders, to be honest. So I'm gonna run some scans and stuff and see which um stocks looks like, gonna hunt for trades and see. So meta right there, you see from here, just price over time is how is this company makes money, man? I don't understand. 104 to 278. I mean, impressive. DoorDash? Where's my God? I just moved everything from the other monitor. There you go. Yeah, I just gonna look around and stuff. Go to full S&P list. A lot of them. That's a full S&P. And D.R. Horton. Look, this is the trade, man. And give me another week or two or so. Just gonna line this up really well. I'm playing around with some settings and stuff, so I'm gonna twist them and gonna change them around and just try to. Um, I don't know. I mean, my goal is to bring this line to this week. You know, so that's the challenge. So we'll see what happens, but you cannot um, control the volume. That's the problem because you don't know which week which stock is going to get what volume. So that's very hard to line up with the other strategy. Yeah, I just see sentiment right there. It's SPG. Every time when you see a buy signal here on the sentiment when it improves, is the price gives you that respond to the upside or not. You see? I mean, those buy sell signals is a totally different game. Your focus is only on this to see in which week that the price trying to rally from there. And then which week the price trying to tip over. ZBH right there, see? It's gonna go. It's gonna go. This stock has potential. I'm not selling these shares. Stock is gonna go. Just gotta break this downtrend line right here from this high, connecting this. They have a three touch points. This is gonna be the fourth one. It will eventually break. Right now, it's fighting this 108. I know it's gonna because it has spent so much time. Just gotta be patient, that's all. And then from there, it's gonna come back and retest this 200 and 115. This zone clears. This thing is gonna rip hard. So yeah, that's 126 and 133 is the upside target. So for now, on the breakout. So that shears, I'm gonna let that thing work. What do you about it? Bottom at 102.45. 75 shears. So I'll make the yeah, it's a biotech stock. This is the one I wanted to hold for some time. We'll see. We'll see. Yeah, I mean, there's coin tipping over. I mean, yeah, it's just pretty late. Depends. Here's Boeing right there. Boeing has been pretty good, nice upside. EOG, got a new one right here. EOG right there. So I'm gonna scan tons of these stocks to see where we can find trades. Day right there, huge pop on earnings. See how sentiment has improved. Buy signal here now. Yeah, next up, this upside will be 75. The next upside target. What else do we have? There's got the guy I want to hold you for all day. There's tons of them. I'm gonna have to filter them and run RRG to see if heading northeast. It's gonna be always gonna be a number one first scan. Always starts from here. I think how much stocks? Jeez, that's it. That's not. It's a new RRG that I scripted this thing is to see which stocks they are rotating out now instead of rotating in. We're looking for always northeast direction. Look at these ones. See? It's just the opposite. I flipped them. So the ones they are going up northeast, they are the one they are losing momentum right there. These are the names. You know? I do 200 um well, these are all daily time frames, so keep that thing in mind. So if I would do on a weekly time frame, now these are the stocks here on a weekly time frame. Yeah, I'm losing momentum on a weekly time frame. FC, like whatever. But we just looked at them, Dash. So we have FCX is losing momentum here. We'll see what happens to the sentiment. Um, FCX, yeah, got a sell signal here. Report. We'll see. Buyers are coming in here, that's for sure. And you. It's really nice, right? Okay. Still gotta. Daily is a little tricky, but we're gonna make it work. Yeah, these are all have buys. This is actually impressive, but it made its move up and it's tipping off. This company got hit hard on earnings. Hilton. Look at the J&J. Yeah. See? This move from here. Yeah, this weekly has very good results. Very good result. Pretty impressive. GPN here. Lab research. Positive. Look at this. That's the beauty right there. See, this is the one I wanted to catch. Well, I'll find something to find this buy to line up with this buy at the same time. And it's gonna be awesome. Telling you. It's not gonna be that many. We just looked at so many of them that we have hardly find you know. Oh, neutral. It's just see like how far this line is compared to this. Which is a good thing, at least mine is the previous one gives you a much better entry until this. Look at this. This is what you call the beauty. One of a kind. Here. See? These are the trades I want to hunt. This is what I want. Same, this is what I'm after right this. Like a same buy signal on the swing and on the sentiment trigger at the same time on the same weekly bar. It's insane upside. Buy signal here. Set your stop loss right there. Sentiment improve. So does the buy signal goes. Look at this upside. These are all the targets right there. Almost hit them right to the penny. Amazing. We'll find it, don't worry. They're not that many. That's what I'm saying. It's just like you're not gonna. This is very, very rare. See how close it can get, but not like the one we just saw on the same week. This is something to watch. EGA. What is that? Heck is that? Dude, did I close this thing? Hmm. No. What the hell happened to that watch list? Change that thing here. I think I closed that one because I have these little small. No, it's right here. No, that's the one I just changed. Futures are up. Dow 36, 41, 10 points. Russell won the flat. Gold, wow, 30 points. Bitcoin is 500. No, nothing. VIX 16. Yeah, they're all ETFs are all closed. And the bond market, gold, everything is closed. Wheat, oil future, meal, wheat, soya bean, corn, Bitcoin here. 30 is 10, 10, 112, 1.12. Okay. Oh, shoot. I think I closed that one. It's crazy, man. Now that I have to make a new one. Just for this, I have to switch because I have everything set on these monitors. And I have to, it as a last change in bid. That's all good. There we go. Yeah, save that one. No. Yeah. Okay, I'm back to business. Okay. We'll see. We'll go one by one. I gotta look through it here. Watch this one, global payments. 75 pages. Oh, man, that's good. See IWM here. Yeah, it's not nothing bearish about the market, man. It's a tough case to make, to be honest, for September. Unless things get tip over or whatever. I mean, that's a different. Just gonna watch day by day, but it's a tough case to make. That's what is picking up pool companies. This is something to watch. NXP Semiconductor. NXPI. Buyers are coming in. Look at this. Huge. So that's it. NC. NC. Yeah, NC has been made a wild move, that's for sure. Look at the weekly buy signal in this, and this thing is just ripped hard. Sentiment buy indicator here, 623. Way, like, way late. It's just because of this. You see the sideways chop? The stock made a. So I always talk about this. You see, goes up, stock went sideways for 7 weeks, and then just it rips right back up. This is textbook accumulation distribution phase right in front of you. Textbook, you know? It's just this. Not many charts out there you're gonna find this. And when a stock like this, and if it has a it all depends on a time frame. If it has a very extended period of time that goes sideways, it's gonna rip hard. Longer and longer it stays sideways, bigger the implied move is to the upside. It's just when ETR and everything basically goes back to a neutral range. So it's just a pretty impressive run. Yeah, yeah, like, yes. Yeah, I like this one. We'll see how it goes. We'll get it up here. Let's see. Need a breakout first, then to confirm. There's a lot of stocks, that's for sure. Walmart, it's good. It's okay. Went sideways, back off. And they look like that's a lot of time. A lot of time. Weekly bars are not just pretty much takes forever to close for the week, and there's a lot of price movement in a one single week. So yeah, these are some of the workday, nothing. IBM now, PAY. You see, like, it just works the opposite way. UPS, no, it's just because of the earning dip it took. CrowdStrike already looked. ISRG, no, no, it just daily has a buy signal and see if it could make a push here. Okay, I gotta go. Yesterday we went end up we had a town here next to us in Naperville, and went to downtown Naperville last night. And then they had a big, huge carnival going over there. Like they have those concert, and it was crazy packed. We ended up over there last night, grabbed some ice cream and stuff. And then Carnival, they have those games and stuff, those rides and stuff. He wants to take two rides. Like, okay, gotta stand in line. He wanted those two rides. I just, and on the way back, when we're coming out, walking because there's a bunch of people. Then her friend was over there, so they saw us, and we just start talking and stuff. Her husband was sitting, talking with me, and they both like, oh boy. So I'm sure we came home probably like 10:30 last night. By the time we got done with all the talking and stuff. All right, I gotta do a few things after what I'm, and then we'll see what I can find. The short, yeah, feature that okay. See. Okay, so you learned how to hedge an old position, correct? And we'll see how the month goes. Yeah, I will do I mean, I'll make the I'll put a hedge on, but we'll see. I have to play around with strike prices, and we can play something to the downside. I know a lot of but a lot of people are more into a bearish mindset than the upside. So we'll see how you can structure some. I like to trade SPX. I know some of you don't do them, but I play around with strike prices and stuff and see what we can try to put something for the month. That would be uh that would be the plan. I'm gonna update some of these levels and stuff, and then we'll put something on. Okay. This stock is LEALLE. The same thing. Okay, that was over. Have a great rest of the day. I know it's almost 12:30. Feels like we're sitting trading market. Everybody will be sitting here by that time looking at the prices and stuff. You can 1 hour features are kind of a little choppy. Yeah, you see how many? Oh, yeah, very narrow range. There's no volumes at this. Okay. Have
Thank
a
you.
great rest of the day, and I will talk later on Slack.
Thank you.
You're welcome.